Hi guys, welcome back. Cuzin's here with yet another one of our top level training educational session powered by Lightforex Broker. I'm going to touch base today on one of my top favorite trading techniques, no doubt. I'm going to take a big topic, the price gaps, but I'm going to focus only on one particular gap. I'm going to clean out all the noise, right? There's one particular gap that I find to be priceless, the most valuable by far, where the rest of them, not so much. So I'm going to take up on that topic and I'm going to show you why I love this one so much. I'm just using it so frequently, almost on a daily basis, definitely on a weekly basis. And I'm doing it very well using this particular gap. So it's going to be super interesting. Stick around and let's go ahead, dive in and take a look. Alright guys, I want to start with first presenting the gaps themselves. Just according to the literature, if you go to the technical analysis common body of knowledge, this is what you'll find: 4 types of gaps. So we're going to do this the elimination style, right? I'm going to take out the gaps that, as far as I'm concerned, are completely worthless. All right, and there are, well, mainly 2 of them. 2 out of these 4 are completely useless. So let me start from the one that I find to be the most useless and worthless. This is the common gap. Right? The common gap, it just happens a lot. It's very common to see this one in the stock market. For example, you see here, this is Microsoft. You can see so many gaps. I've tried to study this particular gap, but I couldn't find any type of any advantage that I couldn't find any edge that I could take advantage of. Really nothing here. So I'm completely ignoring this one, right? Another one is the continuation gap. Right? This one's supposed to happen in the middle of a trend. The only problem is you never know if you're in the middle of a trend or not. You never know. And this is a problematic gap that I've tried to attack from different angles unsuccessfully. So also this one, completely ignoring, guys, right? There is one gap that I have some respect to, I have to say. It is the breakaway gap. Now, to be honest, I don't find it very often. It's quite rare when I do find it. I do not go and look for it. I only will acknowledge it if it stares me right in the face. You know what I mean? And this is a very important point that I have to stress. When I'm talking about gaps, this is a supplementary trading technique. It is not a strategy. It is never a standalone strategy. Right? And this is a very important point, guys. You never trade only on a gap, right? Even the one that I'm going to describe here, which is very good, right? The one I'm going to pick from these 4. Even that one, which is very strong still, you got to back it up with a solid technical toolkit. In my case, it would have to be my support and resistance system. Simply put, it has to be backed up. Every gap has to be backed up with a key level. It has to be either a support or a resistance. It has to be an important key level that you know it is important, it is strong, it is valid. And you can actually visibly see how price was jumping above that key level. That's the gap we're talking about. Only if it gaps above an important key level. That's the bottom line here, right? That's the most important point you want to remember. Now, when we're talking about the breakaway gap, sometimes I find an important key level that has been gapped on, right? The price gapped above an important key level, which I have expected to break out. So, for example, I was looking at price trading below an important resistance key level, which I was expecting price to break out of, and price was gapping above that level. That could be an interesting situation. But like I said, this is still This is still a gap that I have some respect to, but I definitely don't consider it very important. It's not one. It's not part of my toolkit. Now, here is the gap that I have huge respect to, right? And I work with on a very daily basis, guys. This is the exhaustion gap. It is like the reversal gap, if you will. This gap will help you to pinpoint a potential reversal in price, right? It will help you to identify a tipping point. It could be the end of an upside trend. It could be the end of a downside trend. But whenever this one appears, what I like, well, that's also a very important point. It has to also be backed up by your conviction. So, for example, it always has to fit the bigger picture, right? So if I think that price should reverse at this point, at some point, right? It reached an important key level, say a resistance. And I see the gap over that resistance and price starting to come back to close that gap. This is where I know that I'm looking at an explosive situation, right? Because I was expecting that reversal and the gap was happening exactly at that moment. That's what I'm talking about, right? So it has to be backed up with a solid support and resistance system. Now, I'm going to take you to the chart, of course, and show you a few examples in real time, but these are also not just past events. These are recent events that I took advantage of personally. I was very much heavily involved in those positions, mostly, well, not only, of course, but with the help of the exhaustion gap. What the exhaustion gap does is it enhances your conviction. So you already have a conviction, but when the exhaustion gap appears, it just enhances your conviction, and it also helps you to create a better entry setup, right? This is pretty much a trigger when it happens. Let's take it to the charts. Alright guys, the first case I would like to present to you here is the case of the dollar versus the Canadian, which I happen to have a bullish position right now as we speak. I carry this bullish position for quite some time now. Everything started here where I was expecting price to change direction as it was approaching a very important key level, the 27.75 here. And at some point, I noticed something quite interesting. I noticed that price had gap. Take a look at this. This is the gap I was talking about, that I find almost everywhere all the time. This is the exhaustion gap. So I saw the gap starting right there. Take a look at this jump. Now, what it jumped above was the 200-day moving average, because back at that point, I didn't know yet that it's going to be a head and shoulders pattern. I didn't know yet that the gap was marking the tip of the head, right? All I saw at that point was price gapping above the 200-day moving average. And I knew that if it's going to reverse quickly and close that gap, I was going to look at an exhaustion gap, right? Which means that price may potentially reverse the whole trend, because this trend is coming from above. I mean, it's very volatile, right? But obviously it's coming from above. It was a downside trend. And the gap was kind of the tip of the head, basically, well, forming the tip of the head, helping to form the tip of the head, right? So when price went up, I knew that I was looking at an exhaustion gap and I began to take action. Later on, I noticed that a right shoulder was starting to form, and I knew that this gap had a direct relationship with that particular head and shoulders pattern. So this was an important moment that helped me to establish a long-term bullish position, which I'm still in, by the way, right? Everything started from that exhaustion gap. Now I would like to show you a second case study, but now I'm going to take you to the stock market. I'm going to take you to Wall Street, straight to the Dow Jones. Alright guys, check this out. This is the daily chart of the Dow Jones. Now here I'm going to show you another example of a gap that completely convinced me that there's going to be a downside reversal and I should take action, massive action on this one. Now, like I said, every time I find a gap, it has to be backed up with a powerful, important key level. Now, look at what happened here just about a week ago, maybe 8 days ago, where price was on the upside. Now, I knew that I was looking at the trading range, right? There was a clear trading range. I'm talking about this up and down movement. But then, of course, I noticed this gap. Take a look. Price had closed right here, but it gapped above an important key level. In this case, this is the mid-high key level on my system here, the symmetric system. You can see how price gaps above that key level. It opens right here. It trades up and down a little bit in that daily session, but then boom, right? A huge move on the downside that completely covers that gap. By far, I mean, it stretched out. That was just a huge downside day. But when I noticed that move, I knew that this was a classic exhaustion gap on that move, on that upside move. And this, basically what it did was marking the beginning of the next downside leg. And I quickly took action on that one as well, going all the way to the powerful support and key level at 23,957. Take a look at that. That was my, that was my support. That was my official price target, and it got completely hit. And everything started everything started here with that exhaustion gap, price gapping above an important key level, and quickly, in a matter of a couple of days, close that gap to the opposite direction. Now I'm going to take you back again to the currency market. This is the Australian versus the Japanese yen. And this one was also very recent. Here I was able to build up a bearish conviction very quickly on the base of yet another exhaustion gap. So as you can see, I can find these gaps pretty much everywhere, all the time. This is why I like it so much. But it's very reliable if you back it up with a reliable key level. This is very important. When they're combined, they become explosive. And here is another really one of my favorite examples. I saw price entering this sideways movement, right? So I saw price was on the upside, and at some point it began to trade sideways. Take a look at this formation. It was the first leg here, second leg, third leg, and the fourth leg was going up. Now, usually in a trading range where price is trading sideways, it's not the fourth leg that's breaking out. Usually, right? And I'm talking about the most probability. If we're talking probabilities here, you'll see the breakout coming from either the fifth move, or in this case the fifth leg, or the sixth leg. But it's not going to come from the fourth leg. It's very rare to see that happening. Which is why I wasn't expecting price to break out. I actually was expecting price to reverse. I wasn't expecting price to break above the top key level here, which is the major resistance in this support and resistance system. This is the level of 83.44. Now, I was pretty surprised to see price, closing here, right, the daily session, and believe it or not, opening up right here. That is a massive gap, guys. Massive. This is like a 100 pip gap. It's very big on average. You find it hard to find, a 100 pip gap. You can find easy 20, 30, 40 pip gap, even 50 pip, but this one is really big. But, I found it to be fascinating that it gapped right above that 83.44, which was my major resistance. I was not expecting price to break out. So I kind of knew that I was probably looking at exhaustion gap. I already was kind of sensing it from before it actually, closed that gap and officially made it a gap, right? An exhaustion gap. So I saw price beginning to, this is really interesting because I saw price beginning to come off, starting to come towards that key level, and as it did, by the end of the day, I knew I was looking at exhaustion gap, and I was able to take action from this point, right? Before it even closed that gap. The close of the gap was very quick, right? You can see. And price completely turned around and reversed the move. It actually went as far as taking the previous lows, and only then turning around to the other side again, right? And that's typical, right? The thing that price does the most is constantly taking the previous high and going to the other side just to grab the previous low, right? This is very typical. Price takes a lot of stop loss levels in those areas. It cleans up a huge amount of stop loss areas of traders that got in bullish positions, right? Think about traders that got in an attempt to establish a bullish position. Will always look for the recent low and place their stop loss level right below. So there is a huge amount of stop loss orders, and when price goes right at them, it basically cleans them up until there is no more stop loss orders in the market. Only then price can relieve itself and turn around. This is a typical mechanism of price action. Quite interesting anyway. But this is the exhaustion gap I was talking about. So from now on, you might want to start and look for those gaps and single out that exhaustion gap, backed up, of course, with with a reliable key level that you're looking at. Whether it's a resistance, whether it's a support, doesn't matter, because the exhaustion gap can tell you that price is going to shift from its current direction to the opposite direction, right? And that's powerful stuff. That's information that you definitely want to have as long as it's reliable. All right, guys. I hope you enjoyed this session. It was I find it to be one of the most important sessions that we're gonna have here, because this gap is really everywhere. You can find it in the currency market. You can find it in the stock market. And it's easy to take advantage of this one as long as you apply correctly and properly, like I just explained. Anyway, guys, have a great trading day, trading week, and we'll see you in the next session. Bye-bye.